Good morning, everybody.
Good morning.
Morning.
Alan. Morning, Mahesh.
Good morning.
Morning.
Well, good to see you all.
Good, thank you.
Thank you so much. Good morning to our panelists, our moderator, and our attendees. At the moment, we can see we have 70 here on, as people keep trickling in, and we have another 10, 20 on the other side on YouTube. So I think this is good quorum for us to begin, and also in the spirit of keeping time. As introduced yesterday, my name is Alan Mukuki from Strathmore Law School. I'm a lecturer and director of international partnerships, and I shall be your co-MC for today, together with Alex Negwa, who will introduce himself in a few minutes, in a few seconds. This is the final day of the summit. We had a successful first day. Upon tabulating in our numbers, so we had over 1,000 views as of yesterday in yesterday's panel. So that was quite something. Thank you to our attendees and also our panelists for such enriching conversation. Just some housekeeping issues. For those on Zoom, we have the Q&A functionality, which you'll use to ask your questions. Then the panelists could either type in their answers or answer them through the microphone or as they're presenting. On YouTube, you can also use a chat functionality to put in your questions, and we'll be sure to read them to the panelists toward the end, the last 15 minutes of the session, within which the same will be answered. That said, I would like to invite my co-MC, Alex Negwa, to take over and give us the concept of the summit, why are we having this summit, and the concept for today's panel, M&A and private equity legal practice in Kenya. Negwa, welcome.
Thank you very much, Alan. Thank you to everyone who is joining us today. And I think as really highlighted yesterday is that, the concept of this particular summit was to really audit the growth and evolution of the corporate legal practice over the last decade. A period over which, as you may have seen from yesterday's 5 panels, we've really seen significant developments in the practice. And there's also quite, an intense thirst to understand what the future of the corporate legal practice looks like. Now, for our next panel, the focus really much is on M&A activities. And as you may be aware, over the last decade, we've seen Kenyan lawyers and Kenyan law firms advise on some of the biggest mergers and acquisition deals. And I think, as Karim Opara said in yesterday's plenary session, 10 years ago, you'd tell someone about private equity, and a lot of people would not understand what exactly private equity is. Yet, if we can look at the survey report by AVCA, I think released early this year, is that you're seeing more limited partners and general partners prefer Kenya as one of the best or top investment destinations in Africa for private equity. So there's really a lot to discuss on that area, and there's really a lot to understand what the future looks like, both for for the M&A and private equity industry, and also for the corporate law practitioners will be specializing in M&A and private equity in future. And with that, I think it's time to welcome our distinguished panel who will help us take it home. And this panel will be moderated by Eva Warigia, who is the Executive Director of the East Africa Private Equity and Venture Capital Association. And in her role in IAVCA, which is a trade organization for private equity and venture capital funds, she promotes and champions private capital interests in the East African region by building PE and VC awareness among businesses, while at the same time engaging with regulatory authorities to ensure policy design that incentivizes private investment in East Africa. Eva, please welcome. The screen is yours. Thank you.
Thank you so much, Alex, the Strathmore University Law Faculty, and all the sponsors of this summit. It's a delight to be here representing EAVCA, and particularly for this panel. I wanted to introduce my panelists so that we can get started, and I have very distinct bios here. And so allow me and pardon me if I don't dwell so much on each and every person's accomplishment, but I'm sure we do not undermine or underrate your achievements. So to get us going with this conversation on M&A and private equity practice as part of corporate law, we have a panel that has six speakers, sorry. The first one to be introduced is Kendall Evans. Kendall is a director at Bowman's Kenya and a member of the corporate department. He specializes in mergers and acquisitions for both private and public entities and corporate commercial transactions. He's done a bit of, he's done quite the work with NSE listed companies, Bermuda Stock Exchange, providing regulatory and M&A advisory. He's a solicitor with the English and Welsh bars, as well as Hong Kong, as well as a barrister with Hong Kong and Bermuda. Next, we have Mahesh Acharya. Mahesh is a partner with ENS Africa, where he also specializes in M&A, private equity, and cross-border reorganization with a specialization in TMT and fintech. Quite exciting industries there. Mahesh has been an advisor in Kenya and beyond for so many years, and is an advisory council member of the Innovative Law Club in Africa, as well, where he provides strategic guidance in the ILCA, and as well as engineering partnerships and collaborating on special projects. We also have Rose Ndwati Mutero, who's a partner with Anjawala and Kana, and Rose is also with the corporate department at Anjawala, where she provides clients with advisory on capital markets transactions, M&A, commercial, regulatory, and compliance issues. Rosa is a leading lawyer, well regarded for her involvement in sophisticated transactions, and was recognized by the Chambers Global in 2019. She's also been named as one of Kenya's top women under 40 by the Business Daily, and is an advocate of the High Court. We also have Sami Ndolo with us, and Sami is the managing partner of Kieti Law Firm, which recently merged with CDH, or Cliff Decker and Hoffner. And Sami provides financial, corporate, commercial, banking, real estate, and competition law transaction advisory within the law firm. He's a specialist in finance, banking, restructuring, capital markets, and M&A transactions. We also have Susan Muthaura with us, who's a partner with MMAN Advocates, and where she heads the corporate practice group. She has over 22 years experience in commercial corporate law practice, and particularly along the areas of asset finance, equity leasing, equipment leasing, capital markets, and corporate advisory firm, as well as project and private equity financing. Susan is a globally recognized lawyer with the aviation finance, and has also contributed quite extensively to getting the deal through as a jurisdiction author for Kenya within the aviation finance and leasing spaces back in 2019. A very distinguished panel. Like I said, I can't exhaust all your accomplishments, but we do recognize that you are all experts in this area of discussion today. So for our audience, karibuni sana. We hope this will be engaging. feel free to share your questions within the Q&A tab, and Alan and Alex will help us in moderating the questions, which the panelists can then respond. So I started by, I was hoping we could start the discussion by looking at a macro environment around M&A practice. It's definitely been an exciting last few years for Kenya. And I was looking at the Competition Authority report for some of the noteworthy mergers in Kenya. And just to mention a few, we have the Keno Kobil and Rubis transaction. We have ICA Holdings. We have Coca-Cola and Almasi. There was one big one in financial sector, the NIC-CBA bank merger. We also have Sokoni and Tumaini merger, which was a PE transaction. And finally, the acquisition of Java House by Actis Group. So those were some of the mega deals as highlighted by the Competition Authority. And I thought that they were interesting because they're a mix of both strategic acquisitions, if you think of strategic merger, sorry, in the case of NIC-CBA, as well as some PE plays that hopefully can enrich the discussion going forward. But to kick us off, I hope we can start from a macro perspective, where I would like to invite our panelists, starting with Rosa, to give us some of the trends that you're seeing at a global level on what's influencing M&A these days. Global trends in M&A.
Thank you very much, Eva, and a good morning to everyone. It is really an honor for me to be on this panel. And thank you to Strathmore and Bowmans for hosting this panel. I think just getting right into it, Eva, the issue about what we are seeing as common trends. I did try very hard this morning to tell myself, don't say COVID fast. People have just had too much about COVID in the recent past. But unfortunately, it is one of the issues that we are seeing as an emerging trend, and it is directing actually where we are seeing mergers and acquisitions happening. It is directing the trends in terms of the industries where we are seeing M&A happening a lot. So one issue is, of course, COVID. It has pushed the world towards technology and IT-related companies. It has pushed the world towards consumers and consumerism, FMCG products, and things like that. So that is the first trend that I wanted to mention. The second trend that I think we have seen in the recent past is also, of course, a big push by private equity in this part of the world in the last 10 years or so. Well, maybe I could say in the last 20 years, we didn't see a lot of PE movement in Africa, certainly not in East Africa. But in the last 10 years, there's been a huge push, and we found a lot of PE funds, venture capitalists set shop actually in Nairobi as a hub, which has been very exciting for the Nairobi and the Kenya M&A practice. And so that has also been a push on the trend. The other trend is around regulatory practices. So we've seen a lot of consolidation in the market, for example, of financial institutions, banks, insurance companies have had capital raises and requirements for higher capital requirements. And as a result, we've seen a lot of consolidation in the banking, insurance industries and other financial services. Of course, also the fact that there was a capping of interest rates in the banking sector did mean that the smaller banks had a greater need to consolidate because their books could not take the interest cap hit. So the third trend that I would like, actually it's the fourth that I'd like to highlight, and of course I'm sure my colleagues will add to them, is regional expansion. So for a lot of our clients who are based in one jurisdiction, we've seen a huge push to go regional. So we've had clients in the banking industry, in the FMCG industry, in the hospitality industry, the transport industry, all go out into the region and are expanding into countries such as Rwanda. Of course, recently you've seen the push into Ethiopia, which is really exciting. We saw banks, not banks, but companies going to jurisdictions such as South Sudan. Some of our clients have gone to DRC now. And so these are new markets that I think previously were maybe no-go zones for many reasons. But now, because of the need to have regional presence, I think that has pushed a lot of M&A in Kenya in particular and in the region. Let me stop there, Eva.
Yes, thank you so much, Rosa. And just to bring in Suzanne onto this, on the same, how have these developments shaped the opportunities for Kenya, would you say? And is there much divergence from that which we're seeing at a global level in terms of M&A adoption?
Yeah, thanks, Eva, and good morning to everybody. It's a pleasure to be here today. So what I think I'll answer your question, Eva, by touching on the points that Rosa has raised and examining how they have impacted legal practice, which I think really is what this conference is about, and the right. Changes and evolving developments in legal practice. So, Rosa has talked, for example, about regional expansion. For practitioners, Kenya has really been the lead in terms of moving out into East Africa, in terms of Kenyan businesses setting up shop in East Africa. So lawyers in Kenya, corporate M&A lawyers, have had to support their clients in that expansion. It means we've had to develop the ability to work as often as lead counsel, maybe, which is something that we were not used to 10, 15 years ago. We have to manage teams in various jurisdictions, teams of lawyers from various firms in different jurisdictions, to package solutions for clients as they expand into these markets, either through the transaction stage and also post-transaction in the actual operation of those businesses and providing legal advice to the businesses they may have acquired. One aspect of this, of course, is, and it will be discussed later by one of the panelists, is how this has led to the influx of international law firms, the growth of networks of law firms, so that lawyers are able to provide those services. Rosa also touched on the growth of private equity that we've seen over the past 10 years. Again, really increased the amount of work for corporate lawyers in that space, had forced us to learn how to negotiate those transactions, document those transactions, implement those transactions, and we really developed very broad and deep skills of that nature in this market over the past 10 years. I would also want to touch on changes, regulatory, impacted changes, the competition law, Competition Act that came in 2010, as well as COMESA came in around or became effective in 2014. So we've had corporate practices here develop really distinct competition law practice groups and as practice areas within those law firms, advising clients on competition approvals, merger assessment, et cetera, both locally from the competition law perspective, Competition Act perspective, as well as regionally because of the COMESA, our membership in COMESA. Then I'd also touch on the changes in who and how legal services have been delivered over the past 10 years. The entry, I've touched already on the entry of international law firms, the rise of local networks such as ALN, homegrown networks, alliances with global firms, the entry of the South African firms, and all those have really brought development of best practice, strengthening of skills, and forced Kenyan lawyers to up their game in terms of how they sell themselves and how they deliver services in the market. And then finally, touching on the growth of the use of technology in M&A practice, specifically the use of artificial intelligence when it comes to, say, legal due diligence, and introduction of, say, ERPs in many law firms to improve the efficiency of service delivery, billing and costing of work, and client relationship management. So those are all practical aspects of change in the legal field that have arisen as a result of some of the issues that Rosa touched on.
Yeah, absolutely. And thanks for that. So we started at a macro, and Rosa points to the industries that are influencing M&A. And then Suzanne just helps us to narrow it with a special focus on M&A legal practice. And one of the things, Suzanne, you mentioned was just the attractiveness of the new, or maybe the dynamic environment we're in now, into bringing in international law firms to either partner or create alliance with our firms here in Kenya. And I note that Sami is the latest to get into this kind of partnership, and Mahesh from 2020, I haven't forgotten. So I'm curious to hear from Sami and Mahesh, what sweetened the deal for your international alliances and partnership? I know you're the pretty bride, but what really drove the deal home to convince your partners to join us in Kenya? Sam, you can go first.
All right. Now, morning, Eva. Morning, everybody. Delighted to be here, and looking forward to having an engaging discussion. Yeah, so thank you, Eva. Maybe for those who may not be aware, we recently merged with a South African law firm known as Cliff Decker Hoffmeyer. So we are the Kenyan office of that law firm. So it's part of, what we're seeing with our clients, which Suzanne, mentioned about this regional expansion. It's happening both within law firms and as well as our clients. So there's this Pan-African expansion we are seeing as a not necessarily a recent trend, but sort of increasing. We're seeing more of that happening now. I think some of the things that drive this, include the need to service those clients in these markets with specialized law firms. Jurisdictions are different, therefore you need to have good hands on the ground in different markets. So the firm has grown into Kenya, but we're looking to grow into other markets. As our clients grow into those markets, we are growing with them and being able to provide them, a service that is first class and what they expect and what they've been receiving from the law firm. And so, for us as well, since we're talking about private equity, it's we have similar elements that drive some of these deals. And so for us, the first thing is, growth capital. So not necessarily looking at maybe, some earnings or some multiple, but for us as a law firm, that's different. We're more of a human resource. So, the main driver is how do you increase your capabilities? How do you increase your abilities? And so what this sort of mergers do is they provide you with a very sophisticated back end that enables you to provide the seamless service. And then the lawyers are able to focus on what they do best, which is legal work. And the other thing, I guess, is also succession planning, which is quite similar, with people who are entering into M&A deals or private equity transactions. And, for us is we've noticed a trend where, law firms that are set up by founders sometimes don't survive the exit of those founders. So we find that if we can establish a good institutional framework for our law firm, it allows us to, to have a law firm that can continue and exist for 100 years or more. Because we probably have 15 years or so before, we begin to run out of steam and younger people quickly start to compete for the same business that we're looking at. And I think finally, it's validation, so imagine if you're a startup, you've started a new business. Obviously for us, we're not a startup, we've been around the block, I hope I'm not showing my age using that, but, we've been around, but the law firm, being 4 years old, you sort of get that validation that, you're actually doing something right. So when we set out, we did not set out to merge or to combine with another law firm, but it provides you that validation that you're actually doing something right and someone sees value in what you're doing. So I think for me, those are the key things that I'm seeing driving those trends within the law firm setting, and there are quite a number of similarities, with other private equity and M&A deals we are seeing in the market too.
Great. And Mahesh, was it the same case for you?
Hi, good morning all. Good to see you all. I've worked with all the panelists, and it's nice to see them after a while, even though it's not physical, but pleased to be here. Thanks, Eva. Yes, international law firms, Kenyan market, there has been an increase in presence. It's not recent. I think probably a trend that started probably 6-7 years ago. Kenya is quite attractive from a regional perspective, and anyone looking at the continent and entry into the continent, Kenya, Nigeria, and South Africa are key entry points. And for that reason, I think a Pan-African presence becomes relevant. So I came from a law firm which operated primarily in Kenya and had a Kenya focus. And my transition into ENS just gives me that perspective now of what difference it makes to have a Pan-African footprint. And you have clients walking in saying, look, we want a single entry point to be able to come into the region. And that has made a huge shift in my personal practice and the way clients approach me. Other benefits that I see from having a wider presence and a bigger group behind you is the resources, as Sami had touched, right? Suzanne had mentioned artificial intelligence. It's interesting. I'll give you an example. About 6-7 months ago, we had a client come in saying they want to review about 70 contracts for competition law issues. And they had a week to do it. And we were able to turn that around in 3 days just by simply passing it through artificial intelligence technology. Recently, we've been appointed to advise a client on, again, on a tech space to look at about 200 plus contracts that are looking to enter into in the next 30 days. And, you need to resource yourself with about 15 people on a constant basis, on a daily basis over the 30 days. And if we did not have the capability of, tapping into our Cape Town, Mauritius, and Johannesburg offices, that task would be impossible. And you can see where this is going. Clients are becoming more demanding. They want a lot more, a lot quicker. They want the best service. They are used to international best practice, and that's what they're looking for in the Kenyan market. So as we grow, we've got to meet client needs. And I think that's what's going to drive this growth.
Well, thanks for that. As a person who represents the clients in the room, it's a delight to see you're all aligning to our ways. We fundraise from one market, invest in another market. And so to get that our service providers are also thinking the way we are is such refreshing news for us. I want to now look at the deal space, and some stats I got from CAK, their recently released annual report, was that deal flow or mergers that were approved in the immediate last year, so the period 2019 to 2020, were 121 deals, and this is a slight drop from 2018-2019, where they approved 141 deals, so about a 20 deal decrease. And to me, I could attribute it to COVID, but it still seems like it was quite an active year last year, in spite of the tough environment. And I'm curious to see from the panelists, Kendall, maybe you can start. Where are you seeing these deals coming from? Are they in the bulge bracket? Are they smaller deals? And what would you say has led to the number of deals?
Thanks, Eva. And thank you very much all for hosting me this morning. And it's a pleasure to join this panel. So, yeah, I think the Kenyan M&A space and possibly regional has been quite interesting over the last year or so. I think we definitely saw a slight drop off in PE deals. I think early on, just after the pandemic hit in March, I think a lot of funds were trying to keep powder dry. And we're waiting to see how the sort of the economy panned out and just how COVID would impact the region and Kenya specifically. I think a lot of the strategic transactions cracked on nonetheless. So a lot of our strategic M&A deals that we had already in the pipeline in March, and indeed that weren't in the pipeline that came up during the year, continued with a lot of strength. So for example, you saw the Allianz Jubilee transaction, which was a large transaction where Allianz bought a substantial stake in the Jubilee General Insurance businesses. I mean, that was a key example of a strategic acquisition that was large, that continued, and I think shows a lot of support and support for the Kenyan economy and the regional economy, and indeed trust in those economies. So I think in terms of looking at sort of the size of the transactions, I think they're still there. I think there is value to be had for funds who have dry powder, who have money sitting behind them as a result of the pandemic and pushing some firms to sort of to the brink, if you like. So there is a lot of value there. I think what we are seeing though, in terms of if I look at private equity specifically, is that because Kenya is a relatively small market in comparison to some of the larger global markets in Europe or the States, there is a finite supply of very decent targets in Kenya. So what you're seeing is a slight drop off, I think, in PE activity, regardless of the pandemic, in Kenya specifically, in a more focused PE transactions regionally. So as we mentioned earlier, people are looking up towards Ethiopia, DRC, I guess, South Sudan, all, I mean, luckily for us as Kenyan lawyers, channeling through Nairobi up into these jurisdictions. So there is a lot of action for us M&A lawyers, and I think everyone's touched upon that. Suzanne specifically touched upon that a little bit earlier. So it's not all doom and gloom for the Kenyan M&A lawyer. But what it does mean is, I think, we're seeing less PE activity specifically focused in Nairobi. And I mean, I hope in the next few years we'll see some very good exits and probably some secondary investments. But at the moment, I think there has been that slight drop off in PE activity in the Kenya specific market. I think regionally it's still strong. I mean, it's interesting as well because you have some of these jurisdictions are really difficult to do business in comparison to Kenya. Like Ethiopia, trying to invest in Ethiopia it's a difficult jurisdiction, regardless of how exciting and inviting it is, with a huge population, with massive growth potential. I think it's still a very difficult environment to do business. And I think what you're finding conversely in Kenya is that because of our sophistication as a market, a lot of the PE investments that have been made, and a lot of the companies now, either with or without PE investment, are very sophisticated, are large companies. And so for PEs, when they're investing in those, their return is not as great, because you're not growing them from a small or an unsophisticated small company with lots of growth potential to a massive company and then exiting. They're already fairly big. They're already fairly sophisticated. So your growth potential as a fund is much smaller. But so that, I mean, I think we're talking about the big deals there, and then we were talking about smaller deals. There is a lot of VC action in the market. There are lots of great startups in the jurisdiction, in Kenya specifically. I mean, we're an entrepreneurial people. We're brilliant at that kind of thing. And so there is a lot of VC activity in there, and therefore smaller ticket sizes. So we are seeing a lot of that. And I think we'll probably talk about those M&A sort of legal trends a little bit later, but one key point for us as legal practitioners in that is pricing a VC transaction, in terms of what our fees are going to be, and whether that makes then commercial sense for the VCs, and how we go about doing that, especially as our larger firms. And maybe I'll stop there and let somebody else jump in.
Apologies, Eva, you are on mute.
Yeah, Eva, I think you're on mute.
Sorry about that.
No,
I was saying, I liked that you connected between the developments in PE and VC, at least for an industry perspective. We can confirm that a lot more activity is coming from the early stage VC funding side. And it's a bit due to what you mentioned, that there's a finite pool of growth capital ready kind of businesses that we would target, whereas there's more of an open sea for fishing in the early stage startup innovation space. And this leads us to think of specialization as probably an emerging area for M&A practice. And I noted, Mahesh, within your profile, you mentioned that you have specialized on fintech and TMT. Those are certainly some of the drivers of VC in East Africa and definitely in Kenya. And I'm curious to hear from your perspective, how has the M&A legal practice adapted to that kind of interest, especially within the TMT fintech space? And what are the new areas that we should probably be looking at as an industry?
Sure. Yeah, Eva, thank you for that. Yes, it's not out of choice, but just out of default that I've started doing a lot of tech and fintech work, but I still remain primarily an M&A generalist. Yes, Kenya is unique in that sense, and I think it's primarily driven around the M-Pesa offering, which has projected us compared to anywhere else in the world. And as a result of that, you have businesses that have grown around that offering. So anything from payment platforms to switching to integration and so on and so forth. And as a result, you have several startups that have actually seeded in Kenya and the East African region compared to the rest of Africa. That then attracts what Kendall was talking about, VC, angel investments, and then later on private equity subsequently. So whilst they tend to be smaller ticket deals, I think in the next 5 years, if not less, you'll be looking at larger ticket deals. You'll be looking at integration, and with technology, you see, it's almost borderless. So you're then looking at Pan-African penetration. Apart from just fintech, there is a large push into other tech-driven sectors, or sectors that are being driven by tech, rather. There's a lot happening in the agriculture space. So we're seeing a lot to do with agri-tech, innovative solutions around solar and irrigation, things like an Uber for tractors. We're seeing that. I mean, it's fascinating stuff that's coming out. There is a lot happening in the insurance space, what we're calling insurtech, being able to insure your crop on your mobile phone, being able to get weather data to understand what your exposure would be on a certain risk, particularly linked to crops or livestock and so on. So I think we are very well placed as practitioners in Africa, particularly in East Africa. Once you get a handle around payment systems, technology is not tough. People tend to shy away from technology. The concepts are simple. You just need to get your head around it. And I think it's an interesting space. There's a lot happening there.
Great, thanks, Mahesh. I'll tell you that my greatest fear is when I get the Silicon Valley VCs calling me about those complex convertible structures, and it's almost every quarter I get a new term. And so probably just confirms what you're saying. There's a lot of room for growth. And I would probably want to piggyback on that point to ask a very general question to the panelists. Have you begun thinking of sector specialization for your legal M&A/commercial practices, especially to address those kind of emerging spaces?
Yeah, I can comment on that. We have had a sector focus for several years now, aligning our sectors of interest to both where we see our clients operating and where we see the economy heading. So for example, of course, financial services, you can see the amount of M&A activity in the financial services sector, banks and insurance companies. Now we're seeing it with the microfinance sector, agribusiness, TMT, and the like. So we have identified specific sectors where we've sought to become experts as much as is possible to understand our clients' businesses beyond providing them with generic legal services, but actually legal services that are tailored to the industries in which they operate. So certainly it's important. There's nothing wrong with being a broad practitioner, and I think our market is not developed enough to allow us to be overly specialized, but it's certainly important to specialize to a degree that allows you to be of value to your clients.
Super. I think I can add to what Suzanne is saying, and definitely agree to it. Probably around 15, 20 years ago, it was okay for a lawyer to be a jack of all trades, in court in the morning, doing a conveyancing document at 12, and trying to do a share purchase agreement in the afternoon. But those days are gone, long gone. And in order to be able to give good service to your client, you should be able to be a specialist. And when you think about the multiplicity of laws, the developments that have happened, the regulatory landscape and what have you, it really is important that more and more lawyers are specialized in the things that they do. I did a secondment about 13 years ago, and I was so surprised when we could get to an environmental law clause and the partner would say, I need to refer this to X. And when it came to a tax issue, I need to refer this to Y. And I thought that was really strange. But that has caught up with us now. So even whilst in our firms, we are a full service law firm, within our corporate team, for example, we do require that the lawyers are specialists in certain areas. So now we have financial services, M&A lawyers who can do banking work really well. They understand the banking industry and they know what the regulatory framework is. We have people who are specializing in fintech, like Mahesh talked about. So doing a fintech M&A transaction is different from how you do a banking M&A transactions. There are certain nuances which you need to be alive to and more specialist in. So in short, Eva, it's not a luxury anymore. And even as young lawyers are coming up through the process and through the system, it is good in your elementary years, of course, to understand the general legal landscape, but very quickly to identify which areas you are really keen and interested in and start to build your practice towards being a specialist in those areas.
Thanks for that, Rosa. And you talked about regulation as an influence, and I think this is a good chance to look at the regulatory environment as a promoter or probably deterrent to M&A. The answer lies with this panel. Sami, where would you say we are in terms of regulation and its contribution to the number of deals or the values and structures that we get in M&A in Kenya today?
Yeah, so I think over the last 10 years, we've seen an increase in regulation, not necessarily a negative one, but if we focus largely around M&A deals, the key regulator we deal with is the Competition Authority. So I do remember, like, about 10 years ago when we started off, they were struggling to put in place, the committees and so on. That was sorted out, the regulations came, and we've reached the point where we now even have thresholds, which we used to ask for. Because before that, practically any merger and acquisition was, reportable to the authority. But in 2019, we then have thresholds being introduced that say for mergers below certain thresholds, you don't need to notify. And also having, a simplified process for certain types of notifications. So that really helps in making it easier to close smaller transactions that, are expected not to have a negative impact on the market when they're closed. So I think that's a key positive thing I've seen over the last 10 years. It does have an impact on lawyers in the sense of from a fees perspective, because previously any M&A was reportable, right? So we are quite busy, but right now you have to then you see a shift in focus from a competition perspective to maybe the larger transactions, and those ones also tend to have in many cases a regional effect, and so you may have COMESA elements and so on. The other perhaps positive thing with the and I think I'll just focus on the Competition Authority because that's the one we engage with largely from an M&A deal. We find them very responsive. So they are very eager to help. And I think that's very positive in the sense of, if you look at other things that we do, from a regulatory perspective, you struggle to receive feedback from a government department. But you find that the Competition Authority is very engaged and very willing to help. And that also makes it a lot more easier to deal with client inquiries and also, to keep the client in the know and the expectations are more or less, managed in a way that is a positive. The other, perhaps, maybe just also deal with the other side of things is, I think there might be an overemphasis on the aspects of public interest that could be detrimental to M&A transactions in this market. There was recently in the newspaper an article saying the CAK, the Competition Authority of Kenya, has saved 12,500 jobs on M&A deals. To the public, that's wonderful, right? They are saving jobs, but from a deal perspective, from an investor perspective, when you're doing those either private equity or an M&A transaction, you're probably going to enhance certain efficiencies. That mean you do not require to have certain employees. You have duplicity within departments, and so long as you're going to comply with the Employment Act in terms of making some people redundant or building efficiencies that mean you embrace technology in certain ways, it should be possible, to follow the legal process, to let employees go, pay whatever they need to be paid in terms of statutory requirements, as opposed to forcing, investors, to keep employees for given periods of time. So I think we just need to have a finer balance between, protecting jobs and also managing that public interest the public interest to protect jobs vis-a-vis the need to allow a business to grow and to thrive, and perhaps even create employment in the future. There also may be some uncertainties around, and maybe something that could be improved on is legal opinions, or when you ask for advisory opinions from the authority, they then tell you that they're only binding and specific to that deal, right? But I think we need to move to a process where when you receive an opinion, that opinion can then apply to future deals that have similar facts or similar circumstances, as opposed to having in each instance to have that uncertainty as to whether the opinion you received can actually be applied elsewhere. So I think, I think it will help us to be more predictable, more efficient, and I think it could be something that the authority could consider having. I think for me, Eva, those are the key things that I'd mention.
Great. So you've mentioned around the context of the CAK, Competition Authority, as the main regulator that at least most panelists here deal with. But then there's the other regulators, especially if you're working in sectors such as the financial services, or you are doing a transaction in those sectors. And I know some people on this panel have had experiences where transactions take longer than they should, primarily because of those regulatory, I want to say interference, but they may be here. So for the questions that they ask, right? So as we have some in-house counsel on the attendees list, but from where I sit as investors, this is one of the risks associated to doing business in Africa, the regulatory risk. And I'm curious to hear, I had asked if Kendall could comment on this, but I see Mahesh also wants to add. So maybe the two of you can build on that. How can you advise parties like the PE firms that are considering regulatory risk associated to working in Kenya, in Africa? What are some of the measures, precautions we should take?
I'll just, sorry, Kendall, I'll just jump in because I just want to make
crack on, Mahesh.
Slightly divergent point, linking regulatory aspects on a deal to the legal profession. Whilst regulation is good, and that's fantastic, there's also a risk on over-regulation. And that not just disrupting a deal, but just disrupting general business economics in a country. And I think as lawyers, we have a professional obligation, not only to the profession, but also to our clients, to make sure we do not, succumb to overregulation. And I think all the panelists here will agree with me. There are times, and many a times, when the regulator oversteps what they are mandated to do. And I think as practitioners, we have the obligation to hold back the regulator and hold them accountable and question what they're asking us to do and not just comply. And I've always been a proponent of challenging the regulator and not just complying with what they're requesting us to do, because that will fasten the closure of a deal. And I think that's a very fine line. It also points to what Sam was saying around legal opinions and being able to understand the law, interpret the law, such that we don't always need to go to the regulator. We're able to, give our client an opinion and say, we'll back you on this opinion, irrespective of what the regulator says. So I think I just wanted to make that point, that as practitioners, we should be challenging regulators. We should be challenging, requests that just either do not make sense or are outside their mandate completely. Over to you, Kendall.
Mahesh, thanks. I would definitely agree with that. So in my experience, there are some very practical regulators in the market, both regionally and in Kenya. Commercially minded will apply regulations, the provisions of legislation very consistently. And that is very helpful. There are others, and I don't want to name any names, obviously, who are less practical and a bit more difficult to deal with, to put it in a politically correct manner. And I completely agree. It's a point here. It's around if we're trying to promote Kenya as a jurisdiction with ease of doing business, then our regulators need to apply the regulations and use their mandate in a practical, I mean, completely in a correct manner, but in a practical and a commercial manner as well. And there are some brilliant regulators in Kenya, and they, as I said, they'll apply the regulations consistently. They're very practical, very helpful, and that is easy then for us to do business with. But I completely agree with Mahesh in terms of you have to be in a position as a legal practitioner to advise your clients. Yes, you are in our view, you are within the regulations. You do not need to necessarily go and get consent, or where you have asked for confirmation that no consent is required, for example, from certain regulators, and you get a response that you don't believe is correct, then challenge it. And that's also our job, is to challenge the what we don't believe is within the correct reading of the act. And I've done that recently, and we came out with a positive response. And the regulator, we had a very open engagement with them, and the response that we ended up with was in line with what we should have had originally. But it came from exactly what Mahesh has said, from a legal practice perspective, actually challenging that and saying this is how the regulations are interpreted, and therefore this is how they should be applied. So I think there is definitely scope there, and that's I think is how you need to advise your client and manage the risk as well. Rosa.
Thanks, Kendall, for that. And I think speaking to something I'm very passionate about, making Kenya an attractive destination for investment, I think regulators need to be cognizant of the fact that they hold a certain responsibility to that. I want
Ava,
to...
sorry, just to jump in quickly, because it's something that is a little bit close to my heart. I think the Kenya regulators, and I bash certain ones of them without naming names, but they are still much better than the regional ones. Tanzania is a very difficult jurisdiction to do business in. Yeah. Ethiopia is very difficult to do business in. And a lot of it is to do with dealing with the regulators. And yeah. I think our regulators are much more commercial, much more practical. They apply, as I said, regulations consistently. And I think that makes us a very good jurisdiction generally in which to do business. So sorry, I just wanted to say that.
I actually wanted to add exactly what Kendall is saying, because what our experience has been is the more you deal with the regulators and understand what it is that you want. So clients shouldn't really be very apprehensive about dealing with regulators. And what we've learned as a good learning point is that you need a good working relationship with the regulators on an ongoing basis, so that there's a good understanding. You already know what the regulator wants to see beforehand, and being able to produce that as quickly as possible. For some industries, it's actually important to visit the regulator even before you put pen to paper on your transactions, because they want to understand how the transaction is actually structured. And sending papers before you to the regulator, which they take then a long time to understand and then ask questions just because they don't have a good understanding of it, does waste time. So if my response to the fear and the risk that is placed on regulators is good planning helps, understanding the regulator that you're dealing with and what it is that they want to see. And then of course, I agree with what Mahesh and Kendall say, helping direct the regulator to where it is they need to go sometimes is very important.
Yeah, and Rosa, maybe we just address a comment here in the question and answers. Just to be clear, we're not challenging the regulator just for the sake of challenging the regulator to ease business. The main reason you are challenging a regulator is not just to make sure that the deal goes through, but in most cases, and a lot of us are working for, all of us work for very reputable firms, etc. The reason that we are challenging is because of an inconsistent or incorrect interpretation of the regulations of the law. So it's not just for ease of doing business, it's for saying, right, regulator, we do not believe that the way that you're interpreting this is actually consistent with how or it should be interpreted, or should be, and I think that's key, just to respond to, I think it was Arthur's question there. So it's not squeezing the regulator or leaning on the regulator to ensure a correct result. It is challenging the regulator to make sure that the interpretation of the regulations and the relevant acts is done in a proper manner and consistently.
Yeah, well, thanks for that, Kendall. And I, at this moment, want to look at another area of M&A practice, which is the capital markets. We don't get as many these days, or at least I haven't seen. And I wanted to bring you, Rosa, into that conversation to share with us what's happening in the capital markets and how can we use M&A to either promote the capital markets, or what are the spaces that legal practitioners within the M&A practice can tap into for new business or, say, development in the area of capital markets.
Thank you, Eva. I feel like this question has been the same for more than 10 years. We're always saying that our capital markets, how can we use our capital markets more, and why is it so difficult for our capital markets to expand and to grow? And that statement is true, that our capital markets have not been as vibrant as we would want them to be. However, there's been a lot of growth. I think that where we are today is not where we were definitely 10 years ago. The regulatory framework has improved tremendously in terms of making steps, considering where it was. There's still steps to take. There's the vision that, for example, the Capital Markets Authority had put in place to see progress in the capital markets. The growth of the GEMS market, for example, where the difficulties that there are in entering the main market segment were sought to be addressed. And since then, we have seen 4 companies list. Just recently, I think Homeboy is also listed. I believe they would not have done that if they had to do that in the mains market. So I think just to recognize that there has been progress in terms of our capital markets. But capital markets in Africa are faced with liquidity challenges. For example, we used to laugh some point when all the PE investors and all would come, and as an exit strategy, one of the first things they would say was listing on capital markets, because that's what they were used to from the jurisdictions that they were coming in from. And frankly, a lot of them have had to fall back on trade sales as their exit mechanisms. So I think what can be done definitely is continue to engage with the market in terms of trying to simplify the process even further. So that's one point of improvement is definitely on the regulatory landscape, to remove hurdles that don't need to be there, and 2, to make them financially, commercially make sense. So for example, in the REITs markets that came in the last 10 years, but there were tax challenges that surrounded the coming up with a REIT. So whilst the regulatory framework was there, commercially it would not make sense. So issues such as that. So my first point is actually the regulatory framework can further improve, and I think there are many steps being taken towards that. Secondly is a lot around education and investor education. You find that capital markets, a large percentage of it and the activity on it is actually by foreign investors. And if foreign investors sitting in New York, London, Paris think that our market is a good market to trade in, how come the local investors are not doing just as much? Yeah, the retail industry, I think, took a big hit when Safaricom came into the market, and people bid for shares and they got such tiny allocations out of it. And for a long time, they didn't see the share move. I'm sure a lot of those people are smiling right now, seeing the price of the Safaricom share itself. But I think a lot of investor education to the local market is actually relevant and necessary. Also to the local institutions. So we've seen pension funds, local pension funds, insurance companies also start to play a big role in investing into the capital markets. And I think more education and regulatory freedom to be able to do that, I think is also necessary. I think so investor education to the general public, but I think also to specific companies. There are companies, family-owned businesses, robust businesses that are in our market, in the region, that need to perhaps given a nudge to get onto the capital markets, to be able to raise funds and things like that. We did hope that the fact that banks' liquidities were not sufficient to support large borrowings and all could push some of those companies onto the capital markets, but that's not happening as fast as it should. But I think there should be a lot of focus on large corporations, family-owned businesses, and education to them so that they could feel more empowered or knowledgeable to be able to list.
Great. Well, thanks for that. There's certainly a lot to think about. Every time I interact with the CMA or the NSE, they're always asking us, as private equity practitioners, why don't we exit through the capital markets? And you can bet the framework, the regulatory framework or application of the regulatory framework is always one of the things to contend. There's also new developments in the area of capital markets. If you look at the Western world, things like the SPAC, special purpose acquisition companies, are being set up in the US, in London, as exit paths for PE and VC, and probably it's only a matter of time before the local, or at least the African scene, catches up. And probably a challenge to Strathmore Business School to start looking at those as areas of educating and creating specialization for our next generation of legal counsel. But thanks so much for that, Rosa. I wanted to now look at what...
Eva,
yes,
if you don't mind, I just wanted to add something there.
yes,
I think,
sure.
Yeah, I think from what we're seeing, and maybe just to add on what Rosa has mentioned, is, and I think Kendall mentioned it as well, around having finite transactions that are good enough. And I think the NSE has been working quite hard to try and address that. And so, there are recent developments around that. They have established a platform known as the Buka, and also one that is unquoted securities platform. And so for those investors that might be looking for potential targets to invest and that may have a good growth or an impact in the market, I think it's a good place to also look at, because they're trying to aggregate and bring on board those companies that look exciting, companies that might be looking to fundraise but don't know where to start. They'll also be helping those companies to work on their corporate documentation and be investor ready. So I think it's a positive trend. I think there's, for some reason, an aversion to, people don't want to give up control of family businesses or control of, their own operations. So that sort of platform allows them to be visible to investors without having to give up certain amounts of float upfront. So I think, I just wanted to mention that exciting development at the NSE.
Thanks, Sammy. And while you still have the mic, I wanted to refer a question from Stephen Mudibo to you on the investor education. So Rosa mentioned it in the context of capital markets. Stephen asks in the context of PE. Do you think there's sufficient investor education on private equity over the years?
I think maybe the challenge I find is maybe not on the investor side. I think it's more of the, as maybe I'm biased as a practitioner. I think there are not enough of us who are able to do M&A deals or private equity deals, and maybe that is what hampers the growth of that market, because you find, a good target, but the target uses their conveyancing lawyer to get advice on whether the deal is a good deal. How do they set it up? And, we come up with these sophisticated structures and we think they're pretty awesome. Then once you give it to them, they're like, this thing doesn't make sense to us, And so I think that's where the bottleneck is. I've tried to do I took up some teaching opportunities. I'm not able to do them anymore, but at the School of Law, to just train on M&A and competition issues, so that ultimately the people that are then advising these companies at least have an idea on how to close an M&A transaction, what is involved. And I think if that is addressed, we might see more uptake of private equity and a growth in M&A, because the practitioners themselves need to be comfortable to give that comfort to their own clients. So I think that's where the gap is from educational perspective.
Yeah, and while Stephen asked whether the regulator has done investor education, I would hesitate to put that entirely on the regulator. I think certainly the EAVCA and others in our space have a role to play in also articulating how private equity works, which is why we're delighted to be on here, and as well as you as the practitioners, because you're also seeing the new developments within the industry to educate the investors. We have about 9 minutes before we open up for Q&A. And at this point, I wanted to look at, we've talked a lot about the opportunities available. I'm just curious to know if there are any barriers that you anticipate maybe in the present or in the short to medium term that could probably be an impediment to doing deals, to carrying out M&A activity. And Suzanne, I would like you to lead on this. What do you see as some of the deal breakers, at least for M&A?
Okay, so thank you, Eva. I think in our prep, one of the things we said we would highlight is ESG criteria for purposes of investments. For those watching who might not know, those are environmental, social, and governance criteria that companies are supposed to implement in their operating policies, a set of standards. And how ESG criteria are critical, for example, to private equity investors. They use them as parameters for assessing a target, a potential investment, because it's been found that having good ESG policies kind of indicates a better chance of positive performance for a business in terms of its future performance. So certainly the more important those issues become, and I think we all hear the words, the buzzwords that are around at the moment, like sustainability, climate change, etc. Those are all part of ESG, anti-corruption and bribery, etc. And so it'll be important for targets, looking for funding, looking for capital from investors to really examine ESG criteria and start implementing them as part of their operating standards within their businesses, so that, or be ready to take them on as part of investment criteria, so that they are attractive targets and investors don't walk away from them. Spinning off from that, one of the questions we could ask ourselves is, how does is there an aspect of ESG that now will relate to practitioners and M&A practice? And it certainly will, to the extent that one of the roles we have as lawyers, of course, when we're acting for acquirers, is to do due diligence on the target entities. So when we do due diligence, typical due diligence or the way it has been is you assess the asset. You're trying to assess whether the assets, what are the assets and the liabilities of this company as represented by their contracts, their commitments, the assets they own, etc. But we will now start seeing, requests from our clients to start doing ESG due diligence. And that would look something like if you're doing a review of, say, employment due diligence, you typically would look at employment contracts and see whether those contracts are compliant with the Employment Act. Are there any unusual clauses in those contracts that you would want to highlight to your client? An ESG related due diligence would now require you to ask, do we have existing, for example, sexual harassment claims in this business? How are they being addressed? What policies, has the company examined issues such as whistleblowing or the need to have a whistleblowing policy? Are there any existing whistleblowing reports, and how are those being addressed? Because those are the issues that ESG now wants to address. So as practitioners, we'll need to become more and more aware of global trends. For example, we hear talk about the UN Global Compact, which is about businesses committing to engage in sustainable practices on issues such as ESG. And so we'll need to understand those issues better so that we're able to carry out ESG due diligence and advisory as part of our M&A practice going forward. Yeah.
Great. Thank you so much for that, Suzanne. And I noticed someone commented that they're glad to see ESG taking center stage with this discussion, because that's the future, definitely one of the global trend drivers of M&A practice. So we have about 14 minutes, and at this point, I would like to take the chance to address some of the questions shared by the participants through the Q&A panel. There's one question that would probably be a good add-on to the discussion we've just had on ESG, which is on technology. And Rosa, I noticed you said that technology has really disrupted M&A. Maybe you could expound a bit on that. And I know Mahesh had mentioned a little bit, but to what extent, from your perspective, do you think it has been a disruptor?
I think definitely as the M&A market has grown in Kenya and in the region, one of the main things that puts any legal firm in a key position to undertake M&A is the ability to have the right capacity and at the right levels. And so we found that as a firm, we had to invest in big teams to be able to do a diligence. So for example, recently a client was doing an acquisition in about 4 countries. And we needed to have teams that are able to run the diligence for the due diligence for those 4 countries. And one of the things that was really helpful was the ability to have artificial intelligence as a key driver on the quality and the speed and the efficiency with which we could do the diligence. And artificial intelligence now has come in to help in various capacities. One, just organizing diligence rooms, so indexing and what have you. Secondly, doing quick reviews like Mahesh referred to, just being able to look for whether there's a change of control provision in 100 contracts has now become so much more easier. And then thirdly, also internally as a firm, we had to develop diligence reports that could be as automated as possible, so that the lawyers, of course, have to key in their findings, but how that is then generated into a report and what have you, artificial intelligence has stepped in a great way to be able to do that. The other thing, of course, is contract creation. So diligence is one area. The next area is contract creation, especially in contracts that are more template form or standard form, and being able to have a template contract that lawyers can then plug in what is necessary and important or changes or the commercial parts of the transaction. And so that has been a very big disruptor. So for example, on your typical share purchase agreement, the structure is the same, but the parties differ. The nature of the parties, are they individuals, are they companies, the industry that you're dealing with, the kind of representations and warranties that you need in one transaction differ from another, the kind of conditions, precedents, and all of those now can come in an automated format in which the lawyer, you just use brain capacity for the lawyer, not to create the document, but to pick and choose what it is that is critical for the particular transaction that you're doing. And so that's another area that we have seen huge technology disrupting M&A. Of course, the third thing, which sounds very simple, but for those of us who've been practicing for more than 15 years, we know how critical this is. I've done diligences and I haven't moved from my desk. Before, I had to get on a plane and go to Ethiopia, and there was no telecommunication process there. Then I remember about 12 years ago, the first time I went to Ethiopia, and there wasn't, even the mobile phone wasn't working there, and you're supposed to be doing a due diligence and transmitting that information back to Kenya and eventually to the client, and that was really difficult. So technology, speeds of internet connectivity, video calls such as this have completely disrupted the M&A space and allowed for efficiencies in how we are doing M&A transactions today.
Thank you for that, Teresa. And there's another question from Anonymous who asks, is there room for bigger firms to reach out to, I presume, smaller firms to collaborate on M&A work? Kendall, you represent one of the bigger firms.
Are we talking here sort of collaboration as in working with or training or?
I think the person is piggybacking on a comment Sammy raised that sometimes people go to the wrong kind of lawyer. So they'll get their conveyance lawyer to look at a commercial transaction because, say, that's the relationship they have or who they know they can afford. And so the person's asking for M&A work where presumably their shop doesn't have a commercial or
okay,
M&A
understood. Sorry, thanks for the clarification, Eva. Yeah, I mean, in my view, and I think this goes back to what Suzanne was saying a little bit earlier, Sammy's obviously touched upon it, is that it's horses for courses. More and more, you're not wanting to rely solely on who may be very good generalists, but you need to find the correct lawyer for what you are going to do, and also within the correct price point as well, I think. And whether that be a dedicated conveyancer, whether that be a dedicated M&A specialist, whether that be a dedicated disputes lawyer, I think the point is that specialization is not only good for the client. I think it's good for the industry as a whole. Not only because, and I talked about the legal industry, not only because it allows individuals to give better care to our clients, but from the client's perspective, it's so the flip side of the coin obviously is that they get a better service and they get people who actually understand the area in which they're seeking advice. So I suppose that question is key. Yeah, I mean, there is, if you have a smaller generalist firm, I think collaboration could easily work. It's you just say, yeah, I would very happy to refer that person to a smaller firm for a small conveyancing matter that we may not ordinarily handle, or in fact we may just be too expensive for. And I actually do that on fairly regular occasions, or if it's a family law, I know some practitioners, and I'll say, whilst we could assist you, we'll probably be more expensive, and actually this individual is much more experienced in family law matters than most of the practitioners at somewhere like Bowman's. So you would be much better off going to X person. So yeah, I think there is scope for collaboration. I think you've obviously also got to look at the competition elements of it in terms of from a commercial perspective, where we're all in some ways competing with one another for the same meat, animals, whatever you want to call it. And so there is that element as well. But I think we're all in the same industry. There should be an element of collaboration. So yes.
Great. Then there's a question from Adrian, which I like. Thank you so much, Adrian. As most startups or small businesses cannot afford law firms or legal fees, how can we as legal practitioners provide this much needed legal services to these businesses in a cost-effective way? Mahesh, do you want to take that one?
Yeah, I can try. Thank you for the toughest question, Eva.
Yeah, feel free to give us all your services for free, like pro bono to all startups. We could do that.
Look, I think Kendall had touched on this earlier, just at the beginning of the discussion. He said, particularly with VC style and startup, investments, there is quite a bit of work to be done from a legal perspective. But we understand these are startups and they can't quite afford the fees. And increasingly, I'm seeing a lot of this come through, where you have interesting startups which come up and they want legal services and simply cannot afford those rates. And in many instances, actually, quite as recently as 2 days ago, we took a view to assist a specific startup because we could see the potential in that startup. And said, you know what, we'll support you guys on the initial phase. And hopefully 3 or 4 years down the road, when you have the large PE investor coming in, we can be part of that fantastic investment. So I think there's also a need for law firms to look a bit forward. It's almost like an investment, not looking at an immediate return, but a future return. I think there is some scope around that space.
Well, thanks for that. Very diplomatic. We thought you'd commit some time, but we'll take that. Adrian,
I do commit time to several initiatives around
that's
business.
you being an angel investor. So you're an angel legal. That should be a thing. At EABC, what we've done is we also get this question quite a bit, and we took a leaf from the South Africa Venture Capital Association, and what they did is create standard templates for especially the early stage deals that may not have structures to borrow from, or industries are still being developed. So we are in the process of actually creating templates for valuation, due diligence, commercial and legal, which we can then provide through our website or social digital channels to all entrepreneurs. And this is being done in collaboration with a few partners. We should be making that announcement soon. So look out for that, Adrian, as well. And that's our contribution as an association to try and get everyone on a near level playing field. But we always appreciate the help of everyone who can. So thanks, Mahesh, and everyone else who's supporting the early stage ecosystem. I realize I have just 3 minutes, and I want to take this chance to ask everyone to look into their crystal ball. And it's 5 years from now. What are you doing, Rosa?
I hope I'll be retired. But on a more serious note, what my practice is growing into is regional practice more and more, and a lot of them still have a Kenyan perspective, but many of them now even have no Kenyan perspective. So looking to grow the footprint, the African footprint, and being a key player in ensuring that we raise the bar on the provision of legal services in Africa as a whole.
Thanks for that, Tammy. Herding cows?
Yeah. Yes, I think for me, maybe to find a way of demystifying PE and M&A,
Okay.
and making it more. I think we have a robust, constitutional litigation, advocacy and human rights and so on. But I think on the business side of things, we're lacking that level of advocacy and level of engagement. So for me, 5 years from now, I would like to see that grow. I'm not sure how that will happen. I gave it a shot at doing some teaching at School of Law, but then got too busy. But I see that somehow that's what I would like to see enhanced, and I hope to be part of that engaged, part of that engagement. So kudos on the templates you're doing, and we'd be happy to support where needed.
Okay, thank you. And I also took that as me reaching out to you for 3 hours.
Sure. We do a lot of pro bono work too.
Thank you. Kendall, what's the future like for you?
So, I mean, I think Nairobi, Kenya, we've got a rosy future for the M&A practice. I think we're already at the forefront of legal expertise in the region, and we're probably operating in the leading jurisdiction in the region for ease of doing business, for sophistication, and for us as professionals. We're a hub for a number of leading PE funds in the region. We're head offices for some of the largest corporates in the region who are expanding. And this leads to the Kenyan law firms and the Nairobi law firms in particular leading on a number of these deals as lead counsel and taking over from what would ordinarily have been, or traditionally have been, maybe an international law firm's role, which is brilliant. I think we've got some brilliant senior lawyers leading sophisticated and large firms. We've got a thirsty bunch of junior lawyers who are keen to learn and are coming up through the ranks with more practical skills, better commercial awareness and experience than was ever previously the case. But I would say that we can't really rest and see any other jurisdictions around here take over from where we are, which is the leader. We've got to maintain parity with international players. We've got to continue to evolve, work on training our junior lawyers to equal their peers internationally, and we've got to stay ahead of the curve on legal technological solutions.
Thank you.
And I think if we do that, then we will continue to be at the forefront of M&A practice.
Thanks for that, Kendall. Suzanne, what about you in 30 seconds or less?
Thanks. So maybe one of the things to flag for all of us to think about is Kenya recently signed the economic partnership agreement with the United Kingdom post-Brexit, and how we'll be relating from a trade perspective. And when you mentioned what will be happening in 5 years, there's a 5-year negotiation window to potentially include trade and services. So the question then arises, does that mean we will potentially be having foreign lawyers, UK law firms, able to set up shop in Kenya, the way they did in Europe, Eastern Europe, etc., and have gone into South Africa as well. So something to be aware of, something to think about, because they will be coming here to do this kind of work. They'll not be coming necessarily to do litigation or conveyancing. They'll be coming to do transactions, M&A, corporate work. And that's their expertise. That's where they have skills, way beyond anything that we probably have in this market. So if that does happen, there'll be a lot more competition going on, and hopefully our economy will be strong enough to generate enough work to keep all of us busy.
That seems like another panel. Hopefully, Alex has it factored somewhere. But last but not least, Mahesh.
Yeah, I think just very quickly, it's really quality and skill, improving quality and skill, maintaining and keeping the work local. I think we're doing a phenomenal job compared to international standards. Increasingly, I'm seeing clients come straight to us as opposed to go through English counsel and so on. So we just need to spread the knowledge and make sure we are able to keep the work local.
Thank you so much for that. And to our audience, we thank you for your engagement. I took a few notes that I just wanted to recap. One is what Mahesh has just said. Let's try to keep the work local through quality and skill. I think that's what Strathmore is doing, so we applaud you for that. And tied to that is that innovation is easing the workload, at least for the M&A legal practice, and technology is definitely a disruptor in that space. The other thing I took note of is the days of being a jack of all trades are gone and specialization is in. So something to reflect upon. And then there was the fact that legal practitioners should be open to challenging the regulators, not so much to at the expense of public interest, but to ensure that everything conforms to the set standards, regulation, or even the constitution. And then finally, and I guess this one was for me, clients should not be apprehensive of regulators. There's room for discussion and they can also be your friend. With that, I'd like to thank you so much for engaging with us through your questions. Thank you to our panelists. At least I don't have to pay anyone for all the advice I got for free, their occurrence, but thank you, Strathmore, for enabling this. And I look forward to getting invited to the next summit. Over to you, Alex.
Thank you very much, Eva.
Thank you very much, Eva, for moderating that very insightful session on M&A and the private equity practice. I think also one of the key things that was discussed is, the increased role of ESG in the M&A world. And I think for everyone who is interested in ESG, that's going to be discussed in depth in the panel, in our last panel today, which is going to be on corporate governance, and we'll have quite an in-depth discussion on that. So thank you very much, Sami, Susan, Rosa, Kendall, and Mahesh for joining us, taking time off your busy days to join us and mentor us and just letting us get the insights into the practice. And we look forward to seeing you in the next summit. Thank you very much. I'll just hand over to Alan.
Thank you so much, Ndegwa. And as mentioned, for our panelists, thank you so much for taking your time and to be here with us. For our viewers and attendees, we'll take a break, a long break up until 1:30. We know today is budget reading. So of course, some of you might end up multitasking, but we have two very good panels coming up, corporate taxation in Kenya at 1:30. Then thereafter at 3 p.m. we'll have corporate governance in Kenya to end our summit. So I'll try send a reminder early on so that at least if you forget, you see my email and remember, oh, I have to be somewhere and do something. But thank you so much for being with us. And thank you to our panelists again for such an enlightening session. Have a good rest of the day. Thank you.